Trader Tina here, once again from ShortMeTina.com with my daily recap. So I kind of want to pick up where I left off yesterday in regards to this line here around that 245, I think 250 area. This line that I drew yesterday that I talked about over under. I'll get into it in a little bit, but before we do that, thank you for being here. Do me a solid. Like this video and then comment in the comment section. Let me know your thoughts. And so, again, I'm going to be a little bit brief. I don't want to recap all that I said yesterday. Just go and listen to that video. It kind of explains what I was looking at in terms of the chart. And again, this is an hourly chart of the SPY. I spoke about the change in trend. And I also spoke about the fact that while I'm going to let the technicals dictate to me what the market is sort of like edging out to do, I'm also going to be paying attention to the fundamental things that are going on, in particular how long it's going to take us, not just nationwide but globally, to kind of get a grapple and a handle of COVID, because I really think that that can really put a stronghold on the market, and I don't see things getting any much more rosier until we can get a grapple on that. And so I'm paying attention to, really statistically, the infection rate, death rate, unfortunately, as well as, again, how fast we manage to get this under wraps. And I directed you to a chart on TradingView that actually tracks this by major countries as well as worldwide, so you can really get a handle on how well we're dealing with COVID and the infection rates. Again, not necessarily turning a blind eye in terms of technicals, but really looking underneath the hood to see what's going on. And so let's get to the technicals really quickly, and then I'll show you a little bit about what looking underneath actually looks like. So again, over under, I said around 245, 250, this line that I did not move from yesterday, and I said anything over that I'm inclined to be bullish, anything below that I'm inclined to be bearish. And while I did not trust this rally, I really thought it was a dead cat bounce. I've been calling a lot, and again, go look at all the videos that I've done in the past. I've been calling a lot for, at minimum, a retest of the bottom in late March, I think March 23rd, around that 218 level. I was calling for a retest of that area to measure the strength of the bulls and the bears, like see whether or not the bulls can actually defend that 218 territory, or if the bears are going to drive that further down. That's the one area I was calling for. And more precisely, what I would like to see is for us to retest that 2014, 2016 consolidation area of around 200 to 210. So sitting here at 246, we have a ways to go. Markets kind of sold off towards the ending of the day. I want to say the last 2 hours. Although all day we were kind of down 1%, 2%, maybe slight rallies here or there. It really started to accelerate the last hour or two of trading. Most indexes, the SPY, NASDAQ, the Dow, all are off north of 5%. I believe the Russell is down a little bit more. It's down about 2%. So let's kick it off with that stuff that I'm talking about underneath. So anyway, before I do that, let's wrap it up. So right now, the fact that we're down 4 to 5%, unless something happens, I think that this sell-off can actually accelerate heading into tomorrow. So be mindful if you're looking to go long here, or if you have long positions, because if the markets pull back, chances are a lot of the stocks that you're long in will also feel those effects. Remember what I say, overall markets first, individual stocks second. So relatively bearish at this point on the SPY. Shorting it would be a really good way to hedge if you have a lot of long positions, and I've written articles on how to hedge. I'll also probably link that in the description below. So talking about what's going on underneath, I have some links open us. Let's start off with the automakers, right? We know that a lot of folks right now, not just in the US where I reside, but globally, we're all on lockdown. Major automakers close factory, right? They're closing factory. They're not making any cars. We're talking about Ford. Tesla came a little bit late to the game. General Motors and Fiat Chrysler. I'll look at those charts in a bit. What else? Movie theaters, right? If you go up here, what does it say? Similar. Everything is shutting down. Will movie theaters, what is that? Will movie theaters fill up again after COVID-19, right? Movie theaters, AMC, one of the biggest ones, I hate all these pop-ups. Anyway, all of the AMC, one of the biggest ones, decided to close theaters. I want to say mid-March, and they have intent on leaving them closed for the next 4 to 6 weeks, which essentially means that they're making $0. $0. The Hollywood Reporter estimates that the pandemic could cause $20 billion in lost revenue. Again, looking at what's underneath the hood. Remember, I spoke about rent being due April 1st, right? I said, hey, what happens when a lot of these companies, they have to pay their rent? And the reason that I spoke about that is because I ran across this letter from the CEO of the Cheesecake Factory. And mind you, it's not just specific to Cheesecake. I can imagine a lot of restaurants are going through this as well, and I'll look at Cheesecake Factory stock in a bit. And so he wrote a letter to his landlords on March 18, essentially stating that due to these extraordinary events, I'm asking for your patience and frankly your help. Unfortunately, I must let you know that Cheesecake Factory, blah, 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 will not, right here, will not make any of their rent payments for the month of April 2020. That domino effect. And while this article is specific, and again, before I go there, it's not just Cheesecake Factories. There's a lot of restaurants that have to close based, some of them can operate on what I call like minimal capacity. Some of them can provide you with dine out options. You just can't sit in to eat. But some of them, again, depending on the country, depending on the state, some of them have to close shop altogether. So it's not just a Cheesecake Factory. There's a lot of other restaurants that are completely shut. Again, not just looking at the technicals, which obviously is painting a very bearish picture to me, but also looking at what's underneath. Hence why I wasn't so trusting of that dead cat bounce. Now here, Macy's also too, this article was published about 2 weeks ago, saying that they're closing their stores nationwide because of coronavirus. This does not just specifically speak to Macy's, although this article is about Macy's. You have other retailers like Gap, Kohl's, and Nike, a whole bunch of other retailers that have completely shuttered their doors. What happens? You're not making any money if your doors are closed. You're not getting any revenue to pay your employees or your workers if your stores are closed. Again, looking at what's underneath. So this is extremely, honestly, it's frightening. Like, I know a couple of weeks ago, and I'll probably link that as well, I went back and I said, well, where in history can we potentially look at the markets to see, what the future may hold? I toyed with 87. I toyed with the financial crash of 2008. None of that really fit this mold. The only thing that fit this mold for me was the depression that we experienced in the late 20s. Where the market collapsed a whopping 85%. I do not think, because this is, hopefully it's temporary. I know that the Feds are throwing trillions of dollars at this. I don't see us shedding 85%, but I also do not think that 35% decline is it. Now, before I look at some other charts, the ones that I specifically spoke about before I go there, there is a silver lining. The silver lining is, and you'll see it in some of the charts that I talk about, a lot of stocks are at really depressed prices. I mean, some stocks are off 40, 50, 60 that literally have been cut in half. You have AMC. Let's just start here. So we're done with SPY. Let's just go to AMC. You have AMC closed at 264. Let's go back to the weekly. You have AMC closed at 262. Just go back 2 to 3 years ago, the stock was trading at around $35. So I think it's going to get there anytime soon? No, but I can definitely see a situation where this is trading at $6, potentially $8 or $10 within the next year or two. That's a good 300 to 400% from here. So I'm not saying to not buy anything longer term, right? Shorter term swings like that might be a little bit harder, but longer term plays, there's a lot of stocks out there that is at a discount. So I don't think that, I wouldn't fault anyone for nibbling at this point, but if you're going to nibble, I really, for me right now, I am hedged, right? I am hedged. I've been short the market. Guess why? Because I have long positions in my longer term portfolio. In my swing trading account, I'm relatively or mainly cash, and that's like a 85-15% or something like that. But in the longer term accounts where I I'm looking to hold for 5, 10, 15 years, I see my account going down because these are a lot of stocks that I still like the Disneys, etc. But I am hedged, right? And you can hedge in many ways, and I've spoken about them before. And I'll link that hedge article. Make sure to read it. So if you have long positions that you want to hold on for the longer term, what I'm doing is I'm hedging. So enough of that. Let's just jump in and talk about some of the stocks that I spoke about earlier. All right, again, so I talked about the automakers. Let's look at Ford. Ford, I believe, I don't know if that's on the, it's well, I was at a monthly chart. Yeah, let's switch back to the monthly so you can see a bigger picture. So Ford, sitting here at $4.40. Now, I'll admit, Ford has been in a decline since 2000. Like, it hasn't really been able to recover since peaking in 2000 at around $37. It's sitting here at $4.40, almost completely obliterated. You can see even from a technical perspective, right? I just drew what I thought is support. You can see it's even breaking down in terms of support. Now, it's off north of 9% on the day. How far do I think the stock can potentially collapse? Maybe a lot more. Perhaps there's another 50% decline from here. But even these stocks, I think if you buy them at a decent price point, you can still see about 50 to 100% of upside. Not saying to jump in there, but just showing you that even from a fundamental perspective, in terms of these automakers having to close down, the technical charts are also showing you that there's something wrong that's going on. Let's look at Tesla. So this one has held up for a little bit. Peaked in February at around north of $1,000. I tried to short it. I got burned on the upside. Since then, the stock has shed north of or over 50%, sitting here at 481.56. Do I think it has more room to go? Absolutely. I can see Tesla trading at, I could see it declining another 50% from here on out. GM trading at, you can see it here, trading almost at all-time lows, sitting here at 1926. Easy. Okay, let's do that. 2 areas of resistance and support. So anyway, look at GM, another automaker. Closed up shop, off 7% on the day. You can see here also breaking down. It's about to be trading pretty soon at really all-time lows or lows we haven't seen. This only goes back to 2010. Lows from or lower than what we saw in 2010. That's where we are right now. What else? Chrysler. Same thing. Well, I haven't really looked at this chart, but same thing. Sitting here at 682, at one point trading at a high of 2040. So you have a lot of internal damage going on right now in the auto markets. What did I already showed you AMC, so we talked about that. I said I was gonna cake. Let's see, cake, CAKE, which is essentially Cheesecake Factory. Look, below the 200-day, trading here at 1572, also off about 8% on the day. Rent's due. The CEO already expressed in the letter, I'm not paying rent, we can't afford to. At one point, back in 2017, stock was trading at $67. It's sitting here at $15. Is there more downside for these types of stocks? Yes. The longer we have as a society, the longer that we have these restrictions in place because of COVID, the longer these stores, these restaurants, they're going to keep their doors closed. They keep their doors closed, no one's making any money, right? If citizens have this lockdown, shelter-in-place mandate or order from the government, and no one really can't go out to sit down and get a good meal to eat, then these companies are not making businesses. They're not making any money, right? Again, going back to sort of like what's going on underneath. So for me personally, like I've stated before, I'm gonna really pay attention to the internals, not the internals. I'm sorry. I'm gonna really pay attention to the infection rate, and I showed you that graph. Infection rate. Look at the graph. Once things start to stabilize, once we get a handle, the U.S. and worldwide, once we get a handle on the virus, then I think it would be an opportune time, right, to start looking at some of these depressed stocks and hope things actually get back to normal. What else? We're about to wrap it up pretty soon. I talked about retail. All right, so we're gonna like wrap it up with retail because I've gone on a bit longer, but hopefully you get the gist of what I'm saying. And if you don't, again, comment in the comment section. Maybe I can be a little bit more clear in the next video. So I talked about retail, right? This is a retail ETF, ticker XRT. Again, breaking down, right? We've held support with this this particular ETF since 2013. Here we are in 2020, 7 years. And, you know, the bottom has always held. The arrows essentially signifies the point where we got that bounce and it held, but not last month, right? Not March. We kind of blew through that. So we're here trading at 28.03. Again, internals are broken. And I spoke about Macy's. Macy's, honestly, Macy's was doomed a long time ago, but this might actually be sort of like that. How does the expression go? The nail in the coffin for Macy's, right? I want to say when I first started ShortMeTina back in like 2016, 2017, I wrote a very short article essentially saying that that's it. It's over for Macy's, right? And since then, since topping out at like $70 back in 2015, the stock has done nothing. I mean, you've had your bounces, but the overall trend, remember I talked about the characterization of a downtrend, lower highs. The overall trend has been down for a long time. This might just be the nail in the coffin for Macy's. Sitting here at 443, will we get those bounces? Definitely. I think we're going to get bounces at some point. But not looking so good for Macy's. What else did I talk about? I spoke about Gap. Another stock also, too, that, you know, I felt may have been pretty highly valued, and one of these retailers that I think might be also going away at some point. So, but anyway, in 2014, no matter what, stock was still trading in the 40s, right? $40. Now, a few years later, we're sitting here at $5.89, and I just showed you some of those. I mean, you can pull up any of your favorite retailer, whether it be Abercrombie and Fitch, I don't know, Kohl's, maybe JCPenney's, forget about it. Pull up some of these charts and you'll see that clearly there's something fundamentally going on right now. And so for me, I'm going to wrap it up pretty soon. So for me, again, to reiterate, not to sound like a broken record, but to reiterate, and Trump did say, right, in his last briefing, I think yesterday, he did say that we're coming up on a pretty tough 2 weeks, and they're estimating the death toll. It's come down some. It was the initial models that they used had the death tolls of COVID in the U.S. at 1 to 2 million, right? Really large numbers, and because of the measures that they've had in place or that they've advocated for, because of those measures, they're now saying that the death toll might be something like 100 to 200,000. In no way minimizing any life, because even one is a lot. But we've definitely come down a lot from the 1 or 2 million. So he said it's going to be a tough 2 weeks. So back to that graph, I'm expecting it to continue going up. And for me, I'm going to be really paying attention to that because what's going on now, including the lockdown, stores shuttering, restaurants shuttering, business shuttering, unemployment being as high as it is, it has everything to do with this virus. And so for me, things will not get back to normal until we can get that virus under control. So yes, pay attention to your stocks, pay attention to technicals, you know, I live and die by them, but also pay attention to what's going on in that front in terms of COVID. And I think once we can, so that's the theme. If there's a theme for this April 1st video is once COVID is under control and once we have a really good grapple of this virus, I think things will start to get back to some semblance of normalcy, I think. Anyway, so let's cap it there. I think I've talked a lot. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, do 3 things for me. 1, comment in the comment section. Let me know your thoughts, right? Let me know your thoughts on this video or anything else in regards to COVID or the market. That's the first thing. 2, I do videos every single day, so ensure that you are subscribed to our YouTube channel at ShortMeTina. Again, I've noticed 2 things. I've noticed an uptick in terms of subscribers, and I've noticed an uptick in terms of comments in the comment section. So I thank you for your engagement. For those that are not engaging, please comment in the comment section. I usually make it my business to reply to every single comment, and we are on our way to 2,000 organic followers. I love it. And the last thing is, right now what we're doing on our website is hosting a free 14-day trading course, essentially detailing a lot of things that I've learned trading the stock market for the last 20 years. So if that's something that you're interested in, no credit card required. I just need your email address. Then definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening, and as always, thank you for the support. I'll talk to you tomorrow. Remember, 3 days: yesterday, today, and tomorrow. Stay safe.